Hey, it's Jay again with our home of eXp Realty, and today I want to talk about some loan products that you may or may not be as familiar with. I want to talk about different loan programs, different loan types, different down payments, and things of that nature. So I want to first off and talk about the most well-known loan type, and that's a conventional loan. Typically, a conventional loan is a borrower borrowing 80% of the purchase price and then bringing in 20% of the down payment. That can vary from as we've seen conventional goes as high as 90% loan to value, which means obviously is how much of the loan to the value of the home. But traditionally, you see that 80%. At 80%, the banks typically do not require PMI, private mortgage insurance. 90% is pretty popular these days as well. So the next loan product I want to talk about is an FHA loan. An FHA loan is a government-backed loan, and typically the down payment on that is around 3.5% of the sales price, meaning that you can get a loan for 96.5% of the sales price. That is by far the most popular with first-time home buyers or rural areas. The next I want to talk about is a VA loan. Now, the VA loan is really special because they have a lot of different products, and depending on your disability and how long you've been in, there's some cool programs. I'll let a loan officer get into more of that. If you have any questions, I can get you partnered up with our loan partners that we have here at our home. But with a VA loan, you can literally go up to 100% of the price. You can go out and finance that, so you can literally get 0% down. Another 100% program is a THDA. That's a first-time homebuyers program here in Tennessee. Another one would be USDA or rural development, meaning it's going to be out in the country where they're trying to build out the infrastructure. They're willing to do 100% financing on those. Those are what we see typically the most often. Now, one thing to consider on those, you still have closing costs associated with all those loan types. So if you think that you're going to go and buy a home with no money down, unless the seller is willing to pay your closing costs, you still have closing costs, which can be 2 to 3% of the sales price. So on a $300,000 sales price, if you're at 3%, that's $9,000 and closing costs. Now, that can always vary. If you have more questions about that, I'd love to go into more detail with you, get you partnered with one of our loan partners to walk you through what the programs are, what you qualify for, what the addresses are, because some of these loan programs are specific to areas and locations. Another thing to consider is city taxes versus county taxes and how that's going to work out, your insurance, the whole 9 yards. So I hope that video helps. If you have any other questions, email me at info@oh865 and we'll get you paired up with one of our loan partners or just answer any questions that you may have.